Welcome again to our content session. In our previous video, we would have introduced you to the topic of nonprofit organization. And in this video, we will be looking at an example question called Mambo. So this is what we'll be looking at for our example with respect to nonprofit organizations. So I read through this question. It says Mambo runs an outreach program with the aim of bringing the community together through dance. The nonprofit organization has maintained some record of its activities, but not using the double entry system. So they're using a single entry system. The organization reported the following assets and liabilities as at December 31st. So they have motor vehicles. So you have 2013 and 2014. So 2013 is at the end of the financial year 2013, and then you have the end of the financial year 2014. So it would stand to reason that any closing balances at the end of 2013 will be your opening balances for 2014. Okay, so you have a closing balance for motor vehicles, 40,000, subscription in advance, $915, subscription in arrears, $1,120, bar equipment, $25,000, bar suppliers, $4,900, bar bank, $13,060, bar supplies, $7,150, prepaid rent, $4,200, accrued insurance, $800. At the end of 2014, the motor vehicle value $31,000. You had subscription in advance of $572, subscription in arrears of $840, bar equipment value $24,430. You did not know the value for your bar suppliers who are your creditors. You don't know the value at the end. So when we see a question mark like this, it means that we have to calculate this missing figure here, and you do not know the balance at the bank at the end, so you have to also calculate this bank figure here as well. Also, they state that the bar supplies at the end, this is the inventory, is $3,300. So this is inventory, bar supplies. Bar suppliers are the creditors. And you have some prepaid rent at the end, but you don't know how much that is either. So these three figures here we have to work out. And the accrued insurance at the end is $650. The question goes on to state that during the year ended December 31st, 2015, Mambo's bank transactions were as follows. Had donations of $15,000, proceeds from the sale of a vehicle with a book value of $5,000, $5,500. So this is how much they received, $5,500, but the vehicle's book value was $5,000. Purchase of bar equipment, $2,000. Sale of holiday dance tickets, $4,300. Rent, $10,000. Insurance, $7,250. Bar takings, and when you see bar takings also mean bar sales. So bar takings is also known as bar sales, $98,200. Holiday dance expenses, $6,400. Wages for the general worker, $11,000. Subscription received, $7,639. Payments to bar suppliers, $16,049. Then you have some additional information. It states $800 in cash discounts were granted by suppliers during the period. So this is a discount received. You have $800 in cash discounts. Number two, rent prepaid in December 2013 represented equal installments to April 30th, 2014. So this rent of $10,000 here represented payments all the way to April 2014, and they stated note the monthly rent installments increased by 20% from July 2014. Number three, Mambo returned $402 in bar supplies. Number 4, the organization normally applies a marker of 25% to all bar supplies to be sold. So the organization normally applies a markup of 25% to all bar supplies to be sold. And number 5, subscriptions for $210 were written off. Now, what are you required to do? 3 things. You're required to prepare a bar trading and profit and loss account, the income and expenditure account, and a statement of financial position. Before we get to even preparing the bar trading account and the income and expenditure and your balance sheet, before we get to that, we have to work out some figures so to help us to get to this stage. Now you will realize that in the question you were given bar takings, which I refer to as bar sales, but they have not given you any bar purchases, so you don't know purchases. And remember, if you are doing a trading account, you must know your purchases in order to help work out your cost of goods sold, etc. So you don't know that. They also say that you have this $10,000 in rent that you paid, but it needs to be adjusted because for some reason you paid it all to the next year, and then there has this 20% and all of these things going on. Additionally, your subscriptions that you receive need to be adjusted because you have subscriptions in advance and in arrears at the beginning and at the end of the financial year. You also have insurance that was owing at the beginning of the financial year and also at the end of the financial year. Remember, I state that because they said December 31st, 2013, it will mean that these are the opening balances at the 1st of January 2014. And remember, we gave some steps previously with respect to how to prepare financial statements or prepare final accounts for single entry accounting businesses when we did the profit making organization. We are going to follow those same series of steps for the nonprofit organization. And one of the first things that we need to find out is what is the opening accumulated fund. For the profit making organization, we will want to know what is the opening capital, but because it's not mentioned here anywhere in any of the figures we have here. Our accumulated fund at the end of 2013 is not mentioned, so that we could have written it in as the opening capital for 2014. So it means that we have to calculate that opening accumulated fund. And how we are going to do that? We are going to do it by doing our step 1, and we're going to a spreadsheet. We are going to do it by using our step 1 by preparing a statement of affairs at the beginning of the financial year. That's what we're going to do to find out our accumulated fund. So statement of affairs. So Mambo, you put the name of the business, statement of affairs. And it is as at January 1st, 2014, because they give us ending figures. So this is basically a list of your assets and liabilities. Remember your accounting equation. For a nonprofit organization, your accumulated fund will be your asset minus your liabilities, give you your opening accumulated fund. For a profit-making business, it will be capital will be equal to your assets minus your liabilities. So let's list our assets. We have motor vehicle, and the balance, the amount for that is $40,000. We have subscriptions. Remember, subscription is a revenue account. So any subscription in arrears will be an asset, $1,120. We have bar equipment. I'm not listing in an order. I just want to know my opening accumulated fund. $25,000. Bank, $13,060. Bar supplies. This is your inventory. $7,150. And we have our prepaid rent. Remember, a prepaid expense is an asset, $4,200. Okay, so this gives us total assets of $90,530. Again, subscriptions is a revenue account. So as long as revenue is owing to the business, it is an asset. So it acts like that. So we have total assets of $90,530. So we're going to look at our liabilities. So our liabilities will be subscriptions in advance, because this is money that the members paid and the club has not yet provided the service for them. It owed them a service. So it's something like unearned revenue. You have your bar suppliers, which will be your creditors, and that is $4,900. And you have accrued insurance, and that is $800. So now we have total expenses, total liabilities, my apologies, total liabilities of $6,615. So we are going to subtract the total liabilities from the total asset, and it will give us our accumulated fund. So that will be $90,530 minus $6,615. And we have opening accumulated fund. So this is accumulated fund at 1st of January 2014. Okay, so accumulated fund of $83,915. Now this completes our first step, where we worked out our opening accumulated fund by using the statement of affairs. In our next video, we are going to be looking at our second step, where we prepare the receipts and payments account. So I will see you when we return in our next video.